Greetings and thank you for joining us today. I'm at the Sovereign Society's Global Currency event, and I'm here with Chuck Butler. He is the president of EverBank's World Markets. Chuck, thank you for being with me.
Thanks for having me.
All right, Chuck. So let's talk about, first of all, the issue that's on everybody's mind right now is Cyprus.
Okay.
And you run a bank. So let me ask you this. Could this happen in the United States where the government comes in and confiscates essentially people's savings accounts?
Well, obviously, the answer to your question is yes, it could happen. Would it happen? Things would have to get pretty dire for that to happen. But the thing that I pointed out in a newsletter that I write every day to my readers is that this plan was hatched. This plan to take these deposits, these excess deposits out of these Cyprus banks, was hatched by the FDIC and the Bank of England. So obviously, someone in this country has already been talking about or thinking about how this could happen. And those are the sorts of things that I'm a big conspiracy type guy. Those are the types of things that conspiracy theories start from. It's like the root.
Yeah.
Where did it start? Well, it started with the FDIC. Oh my goodness. That could mean that people here in the U.S. have already thought about this going on here. Okay. But like I said, I really do think that it's one of those things that things would have to get very dire here in the U.S. I think they're going to get pretty bad, but I don't think they're going to get that bad. Now, there was a story in the Wall Street Journal yesterday that part of the new budget plan is going to restrict the amount of money people have in their IRAs and retirement accounts to $3 million. Now, what happens to the excess money that they had in those accounts? Okay, so already there's it seems as though there's this buildup. It's starting to build up towards something like this. But like I said, I just think that that budget plan probably will get nixed, and I just think that things would have to get really, really much worse here than they are now.
Was it all bank accounts in Cyprus, or was it the healthy banks and the bad banks, or it didn't matter? If you had a bank account in Cyprus, everybody was over 100.
Yeah, basically what they tried to do is they tried to take all the banks that were good and make the ones that were bad better. Okay, and so anyone that had excess amounts of euros in their accounts over the let's call it the FDIC level, had them removed, and I find that to be just something that should never ever happen. That's your money. You gave it to the bank to hold for you. You could have taken it out and put it in your mattress.
Yeah.
But you didn't. You gave it to the bank to hold for you for safekeeping, and then the next thing you know, your government takes it from you.
Defeats the whole purpose of having a bank account.
Yes, it does.
They've already taken away the interest rate and the yield, so now they've taken away the safety, at least in Cyprus. Let's move on to the state of the banking industry as a whole, specifically here in the U.S. You run a bank in the U.S. There was a liquidity event in 2008. When you look at the big picture, can there be a liquidity event again like 2008? Or is there so much liquidity that any new crisis will be anything but a liquidity event?
Well, my boss, Frank Trotter, who you interviewed before, likes to always say that liquidity only matters when it doesn't matter. Okay, so liquidity is something that I think is going to be another problem here in the U.S. I think that the banks have shored themselves up quite a bit, but we're starting to return to the same types of bad habits that we had before 2008. You can turn on a radio station in a local town and you'll hear mortgage ads all day long. Those mortgage ads are going to start talking about creative forms of financing, giving loans to people who probably don't qualify. This is the same types of problems we ran into before 2008, and we're going right back into that. We heard just the other day that the government, the U.S. government has pushed banks once again to give loans to people who don't have stellar credit. These are the things that got us into trouble in the first place, and we're going right back to them again. Now, the only thing that's saving us from having these problems again right now are these low interest rates here in the U.S. I think they're going to remain low for quite a long time. So you have that as sort of a thing to bounce off of. But I'm really concerned about us going forward and where we're going to be in a year or two from now if we're going back to the same type of lending problems and the same type of packaging of mortgages and everything that got us into trouble in the first place.
As a smaller bank, when you look at some of the things the bigger banks are doing as far as these type of loans, how does that stuff affect you? And then the next question would be the Frank Dodd bill. How did that affect the smaller bank versus the JP Morgan?
Well, I'll tell you one thing. One thing, I've always been associated with smaller banks. And what I've always found over the years is that the regulators are tougher on the smaller banks than they are on the larger banks. They'll make us cross every T and dot every I and follow every rule that's ever been written. But they'll look the other way for the bigger banks. So to me, I look at it like this. We'll have to go through and make all these changes for Dodd-Frank. We'll have to make all sorts of investment of employees to do different tasks that never had to be done before. And we'll follow all the rules. But the big banks, they won't have to. And that's just the way it's always been. That's the way it's going to continue to be, I think.
EverBank is a smaller bank. It's in Florida. Is it outside of Florida now?
Well, EverBank as a whole is chartered in Jacksonville, Florida, with some branches around Florida. But EverBank also has an online division. That's where I'm housed. The online division is in every state and quite a few countries around the world. So we have a global presence, if you will.
Now, I'm actually a fan of EverBank. I consider you guys the good guys. You guys are helping people diversify to the dollar, helping purchase gold and silver. And I went to your website last night, and I was reading on the gold storage, not the pooled account, but the allocated account. Mm-hmm. It said that it was going to be stored by a third-party vault, but you weren't allowed to know where it is. Because I would like to do this. I would like to store some gold and silver with you guys, but I'd like to ask you, hey, can you store it in Toronto or somewhere outside of the U.S. System? Is that request is not available, and will it ever be available?
Well, I don't think it'll ever be available, and the reason is that we look at it as you have your account with EverBank, okay? Where we hold the gold is at our discretion. We hope that you have the trust in us to make sure that your gold is safe, and to have people actually direct us where they want the gold to be held. When you think of all the thousands of customers, tens of thousands of customers that we have that buy gold products and actually have the allocated accounts, that would be a lot of different allocation directions that we would have to be taking and giving on a daily basis. So we decided long ago that this is something that we decide where it'll be. We do all of the due diligence and make sure that wherever we're holding it, wherever the custody is, it's a very safe place. There are times when we'll tell people where it's being held, but for the most part, we just say that your account is with EverBank, and we trust that you trust us to make sure that your gold is safe.
On the currency side of it, again, I went to your website. I wanted to ask you these questions. Well, first of all, actually, after seeing Frank Trotter and some of the other people, I was very interested in maybe getting into the currency markets. I'm more in the gold and silver and stocks and real estate. And I noticed there's not too many yields. Is this just because we're in the midst of a currency war?
Well, I don't think it's because we're in the midst of a currency war. We're in the midst of a global recession. And whenever you have these types of recessions, you just see interest rates falling. And it's because each country is trying to revive their economy. And so we've seen interest rates fall quite a bit around the world since 2008. And they tried to recover in 2010. We had interest rates increases in Australia and Canada and Norway and Sweden. But obviously what happened is then things slowed down again and they had to go back and cut them. But there are some interest increases over the U.S. rates that you can find around the world. Australia is one, New Zealand, Mexico, Brazil, South Africa. These are all countries that have interest rates at least 250 to 300 or maybe even 400 basis points over what you can get for a deposit in the U.S. So, but the interest rate in a currency doesn't always be the main driver of the currency's value. Mm-hmm. The main reason to invest in a currency is to diversify your investment portfolio. So that not all of it is invested in U.S. dollars. So as you own a currency, you hope that the currency remains stable or at least rises against the U.S. dollar. Those currency increases will always be a major component of that currency's value or return to you versus the interest rate.
Yeah.
Okay. But interest rate differentials have always been one of the key value features of a currency. So when you look at a currency, you always want to value it as the stock of a country. Okay, so that country's currency is the stock of the country. So when you buy stocks, you know that you want to use a criteria of looking at the company's balance sheet, the leadership, the yield, the ability of that country to attract investment, and if they have things that people want to buy.
Yeah.
Do that same thing for each country, and you'll come out with a group of currencies that probably make a lot of sense because they have that strong criteria of a good balance sheet, yield, leadership. And when I talk about a country's leadership, I talk about their central bank. Does their central bank provide price stability and not allow inflation to grow in that country? Or does your central bank nilly-willy cut interest rates and promote inflation? Those are the kind of countries you just want to push to the side. You don't want that stock of that country, and you only want the ones that have the strong fundamentals.
Do you guys? I know everybody. It's their own risk as far as which currency they choose through EverBank. But do you guys make it a point to say, hey, we're not going to even offer the Zimbabwe dollar to our customers?
Well, basically, the currencies that we offer have to meet a criteria themselves. Now, the criteria isn't whether they'd be good or bad. The criteria is are they fully liquid? Okay. Are there a number of dealers around the country and the world that will make a market in that currency? If there are, then we will choose to offer that currency to our customers, because the last thing you want as a customer is non-liquidity of your currency. So if you call me up and want to sell your currency and I say, you know what, there's no market for it, I can't sell it for you today, you would be very happy.
Yeah.
Okay. But so with our criteria of always making sure it's fully liquid around the world, and there's plenty of dealers to do business with the currency in, we'll always be able to buy your currency and sell it on the street.
In closing, Chuck, just looking at the big picture when people look at the currencies, specifically regarding the U.S. dollar, do you see the U.S. dollar continuing its trend down? Or because of the currency war, because other countries are devaluing in Japan and what's going on in Europe, do you see the dollar actually being pretty strong from here?
Well, I don't see the dollar having a lot of ability to go on any kind of multi-year rally. The reason is that the U.S. has just accumulated too much debt, and they have to finance that debt, and they have to deal with printing lots of dollars. And anytime you're printing lots of your currency, you're just devaluing the value of the existing stock. So, but we will see these periods of dollar strength. We saw one in 2005, we saw it again in 2008, and then in 2010, and we're kind of seeing one now, although the dollar is strong against, let's say, the yen and a couple other currencies. It's not strong against the Australian dollar, the New Zealand dollar, the Canadian dollar, those kind of currencies. If you want to get a gauge of where the dollar actually is in the minds of traders around the world, think about this. There's been all this negativity about Europe for the last 2 years. People have said it's going to collapse, the Eurozone's going to break up, the euro will go to parity or even lower, and none of that has happened, okay? And in fact, the euro's trading at 1.30 to a dollar, so it costs you 30 cents more than your dollar to buy a euro.
Yeah.
What does that tell you about what the world thinks about the dollar? It tells you that they don't have a lot of faith in it, because if all this negativity about Greece and Spain and Italy and all these things are going on, but yet the euro is still trading at 30 cents over the dollar, that tells you that the world doesn't think much of the US dollar.
That's a very good point.
Yeah.
I know I told you that was going to be the last question, but I can't let you leave before I ask you about Bitcoin. Do you guys have any intentions on getting involved in that market? Is it even possible for a bank to get involved in the Bitcoin or Litecoin market?
No, it's not. It's not. We've looked at it. We've been following it for some time, and the reason is that we've always had interest in this digital money type stuff. Mm-hmm. My boss and the guy that you interviewed before, Frank Trotter, was actually involved in one of the first digital issuances of cash back in the 90s called DigiCash. Okay, there have been many forms of these digital cash systems ever since. Maybe this guy has figured it out that on how it would actually work correctly.
Yeah.
We're currently looking at it, doing a lot of research into it. We think it's a really neat idea, but we have no ability to be involved in it.
You can't yet use, you can't have, let's say, Hong Kong dollars at EverBank and swipe your debit card and it does some type of conversion at bond or grocery store or gold, right. Perhaps. You can't do that yet.
No, but we went to the credit card companies, the Visas, the MasterCards, almost 12 years ago and said, this is what we'd like to do. We have these accounts that are denominated in these foreign currencies. We would like to issue a card that they could take on their trips overseas, and when they swiped it, it would just pull the euros, if you will, out of their account.
Yeah.
Well, they already bought the euros, and they already paid for them, so it's not like they would have to buy them again.
Yeah.
But the credit card companies wanted to know how they would get their conversion cost out of it.
Oh my gosh.
Okay. So they've not been able to ever work out them not taking a conversion fee for that transaction. And so we've never been able to work out an agreement with them on how to do that. But there's more credit card companies all the time coming around and saying that they think they know how to do this. I hope that it really does come about someday, because that would be the ultimate for your money market account that we hold in foreign currencies at EverBank. We hold all these different accounts in different currencies. So you could come in and have up to 20 different currencies in your account, just like you would in a European bank. Mm-hmm. But let's say you want to go to Australia and you've got Australian dollars in your account. You just we send you a card and you just go to Australia and you just keep buying all your meals and everything else, and they just come out of your Aussie dollar account.
Yeah.
That would be so ultimate for travelers.
Yeah.
And we're still working on it. We hope someday somebody will want to say, you know, we'll just take a fee and a fee instead of a 75-cent fee instead of a conversion cost. That would be something we could work with.
Yeah.
Okay. But until then, our hands are tied.
Chuck, thank you so much for taking the time.
Thank you.
What's the ticker for the stock? You guys are public now, right?
We are public. It's EVER.
That's easy. EVER.
Yeah.
Does it pay a yield?
It does have a dividend, a quarterly dividend that is paid out. There is also a preferred stock that has a 6% yield. But these are all things that you can find on Yahoo Finance or any of the other types of places that run stories on EverBank.
Yeah.
We became public last May, so it's still really kind of new to us.
Yep.
And it's been an exciting time.